And thank you so Hello, everyone. Thank you so much for coming to today's Building Credit from Scratch presentation. We are so excited to be able to share this with you today. Credit is super important. We actually have a couple different credit presentations, this one being a little bit more focused on like where to begin or how to rebuild if you've had some trouble with it. So thank you all for coming. As people filter in, we're going to do just a little bit of bookkeeping to start things off about today's presentation and the type of content that we have. So we're in webinar mode today. I'm sure all of you are very familiar with Zoom at this point. Webinar mode basically means that you're all automatically muted, cameras are automatically off. So enjoy your lunch. You don't have to worry about background noise or anything like that. This does also mean that rather than using the Zoom chat for any questions or feedback or comments or anything like that, we are going to use the Q&A feature on Zoom. If you're not quite as familiar with this, it is a feature where you can ask questions. Sometimes it's on the bottom taskbar on Zoom, but sometimes it is kind of hidden behind the More section of the options down there. So if you don't see it right away, the Q&A sort of bubble there, you can hit the three dots that says More, and then you should see the section that says Q&A there. So if you want to test it out, we'd love it if you could chime in with maybe where you're joining us from or if you have any questions or anything. We'd love to. We'll try to answer them as we go, or we'll leave some time at the end as well, just to make sure that we answer any and all questions people have. So this is also being recorded and will be added to our YouTube page for future viewing, so you can always review it. This and all of our other webinars that we do are always on there, so you can check out our other credit presentations that we have that are maybe a little bit more focused on credit as a whole. If you want some follow-up as well, there's a lot of different options for you, but we really appreciate it. Thank you so much for joining us. Um, and a little intro first. So my name is Ty Robinson. I'm joined with my team today. We got Terrence Bazil. He's going to be kind of our expert today. And then Jen is in the background as well. We are the community engagement team here at the credit union. And one thing I always like to say is, why should you listen to us? And that's because we are actually certified credit union financial counselors. So we are licensed. We know a little bit about what we're talking about when it comes to this stuff. And we are always happy to share our knowledge. So real quick, the number one question we always get is what is the difference between a credit union and a bank? So I want to hit on it really quickly. A credit union is basically the same thing as a bank. We do all of the same accounts, checking accounts, savings accounts, credit cards, student loans, everything, but we are not for profit financial institution. So we like to say that that makes us just like a bank, but better, because we are not looking to make a profit off of our members or for shareholders or anything like that. We do make a profit as a financial institution, but we are able to re uh re allocate that back
Reinvest.
into yeah, reinvest, reallocate back into our membership, back into our community in a lot of different ways. Like our whole roles as community engagement are very much tied to that. We have really good products and services. We charge very few, if any, fees for things. We have really good rates, interest rates on our high yield savings account. We refund all ATM fees if you have our debit card, even if a different bank charges that fee, we refund that, which is really cool. And even though we are a bit of a smaller footprint, being a credit union, we actually have this access anywhere because we're part of the credit union shared branching network, which is a nationwide network of different credit unions coming together so that you can access your accounts at one credit union at an entirely different credit union if you're traveling or you're not nearby, which is really, really cool. So we really like to help out our community and help and educate and do all of these wonderful things. Today's webinar being, proof of that. So thank you all so much for coming. Thank you for being part of this. And we're really excited to get into the agenda today.
Okay. Thanks, Ty. So in today's agenda, and if I'm looking up, please disregard, I'm looking at my second screen. We're going to talk about credit. What is credit and why is it important? How do I build or rebuild credit if you are in a position where you are new to credit, or if you are experienced with credit and you just want to get your score a little bit higher? We'll cover that. Some credit myths as well. Maybe some things you've heard of a friend say. We will be dispelling all myths and replacing them with some good quality information and some healthy credit habits as well. So that way, no matter where you are on your credit journey, if you are experienced with credit or if you are just brand new, some new tips to help you keep going on that healthy credit habit journey. So, we're going to start off the presentation with level setting and talking about what is credit. And credit is an agreement wherein someone receives goods or services now with the understanding they will pay the creditor back later. So that's a really fancy way of saying credit is a version of a loan of some sorts with terms and repayment agreements with whether it's going to be a certain amount of time or fixed amount of time and or an interest rate, and you'll be paying that money back at some point in time, in full, and sometimes with a little bit more of this interest involved as well. Next up, what is credit? So, as we begin, we're going to look at what a credit report is. A credit report is a statement that has information about your credit history and current credit activity. It shows details about how you are active, how you are currently, and have previously managed multiple credit accounts. If you have a mortgage, if you have an auto loan, a credit card, and sometimes even some utility bills, and or if you lease your phone, that will show up on a credit report. And a credit report is created and managed by the three credit bureaus. So there's three major bureaus. There's Experian, TransUnion, and Equifax, and each one may have different information based on which your lender is reporting to. So not every lender is required to report the information that they have for you to each of the three credit bureaus. So you might have some variances and some discrepancies based on which credit report you're pulling. Also, the credit bureaus are responsible for collecting information about you. They collect information from creditors, lenders, utilities, debt collection agencies, the courts, and various other places as well. And the information they're collecting is about you, the individual consumer. And what they're looking to see is how well are you able to manage your debt, any credit card debt, auto debt, education debt, and they're looking to see, are you making your payments on time? Are you making them in full? Do you have any high balances on your credit report? And none of that, and all that information is compiled and collected. They're also looking to see if you have anything that's been sent to collections. So if you have, uh, for example, not made a payment, or you believe that you got a bill in the mail and it's like, that's not mine, I took care of that, and you're not worried about it, and eventually it does end up in collections, that will end up on your credit report as something that could possibly negatively impact you and further negatively impact your credit score. Again, looking at your payment history. Are you making your payments on time? Are you making them in full? And that does matter. There's a big difference between making your payment on time and in full. If you only make half the required monthly payment, that doesn't really count as a full payment. And if you're making your payments late, that also will have an impact on your credit score as well. They're also looking at your account history to determine how long have you had your account open, and are you using that account responsibly and wisely in a way that benefits you and your credit score. They're also looking at your request history and or your inquiry history to see how often you are tapping that line to say, hey, can I have a new credit, and extending it out, which is a lot of information. And if you're new here and you're like, whoa, this is a lot of information that some random three organizations are collecting on me, and I'm not comfortable with that. What can I do so that way I'm able to also be in the know about my credit report information? We got it for you. You can get your free credit report at annualcreditreport.com. So, current post pandemic, you are now able to receive free weekly copies from your report from any of the three credit bureaus. And I do want to mention that if you are going to Google this or type the link in directly into a browser, you might have to scroll down a little bit and do some digging. If you are asked for credit card information, you are in the wrong place. This is a completely free service where you can get it from annualcreditreport.com. It's the only place where you can get it for free. If at any point in time throughout the process that you are researching your credit report and they're asking you for any type of payment information, please stop. You're in the wrong place. Don't put in your information. Go to annualcreditreport.com. And I think Ty is going to be putting that in the link in the chat, and he did. Thank you very much, Ty. And if you have any questions at all, please feel free to continue posting your questions in the Q&A. More than happy to answer. Next up, let's jump into managing your credit score. So now that we've discussed what is comprised and what information is used to make your credit report, which then will be influencing credit score, we're now going to talk about what is a credit score. Credit scores are a measure of your consumer credit risk for lenders. What does that mean in just normal human terms? It means how likely are you to pay back your loan with the agreed upon terms, with the agreed upon timeline. And the higher the credit score you have, the more likely you are to pay back whatever loan you are given within some certain time frame. And with that higher credit score, you will qualify for lower interest rates. If you are on the lower end of the credit score range, then you are not as likely as someone who has a higher credit score to pay back your loan, and you are seen as a riskier borrower or riskier person to lend to. Not a personal reflection of who you are as an individual, more a reflection of your ability to manage credit. And no matter where you are on this scale, it is not a set in stone. If you are in the fair range, you're not going to be there forever. You are more than likely and 100% able to move up if that is your goal and that is what you're looking to do. Some more information. They are independently managed, so there's a whole other two groups outside of the credit bureaus. There's the FICO score and Vantage score. So two new organizations that now take that information from the credit bureaus to say, okay, based on what we have seen so far from Experian, TransUnion, and Equifax, here's the score that we're going to deliver. And I do want to go through the scores. So poor is about 300 to 579, fair 580 to 669, above average 670 to 749, and excellent is 750 plus. And you can go as high as 850. I think we have a Jen in the background who I think has the highest credit score I've seen thus far, like well above in the 800s. So kudos to her. And I will say, again, not a personal reflection of who you are as an individual, just a reflection of how you've been able to manage your credit thus far. Now, let's jump into why is credit important? If you are new to the States or if you've been here for a while, credit is incredibly impactful for a multitude of different reasons. And we're going to talk about why that is. So, credit can impact your ability to rent or purchase a home. Uh, if you are new to the States again, or if you are new to moving out and trying to do things on your own, when you are applying for apartments, your landlord or your soon to be landlord will possibly do a background check and or credit score deep dive to see, can you make your payments on time, because what they're looking at is, will you pay your rent on time, will you pay your rent in full. And that is it's not a direct reflection, but your credit score is used as a kind of indicator or for to level set to say, okay, to compare like terms, and so that way everybody's a little bit equal in that way. Your ability to get and keep some jobs, especially if you are in finance. Uh, Credit scores, your credit score will be pulled to determine, like, all right, are you good with money? And it may not seem like it's inherently fair because your skill set may not require you to be like good with money, but unfortunately this is the reality that we live in. And not every job will have this same requirement, but some jobs will do require credit check before a job offer is extended, and some will periodically review your credit report throughout your employment. And this includes, but is not limited to, military clearances as well. And Ty, feel free to jump in here if you like have anything that you want to add in. Uh,
Yeah, I
but
think it's just like it's really important to know that it kind of can impact a lot of different areas in your life, regardless of trying to apply for like a specific loan or something like that. Like there's a lot of little things that it can be impacted by. And I know it's stressful to think about it and to worry about it, but really, like as long as you're practicing good habits, which we'll talk about, um, it'll really help you. It is mostly a tool to help, and it's
Mhm.
sometimes frustrating or difficult, especially if depending on how you've been able to handle it, uh, to build that. But it will be very helpful in the future once you've found a way to cultivate that good score.
Absolutely. Also, your ability to open bank accounts and access loans or credit cards. So, if you are looking to bank with, let's for example, like not a Bank of America or a Chase Bank, but let's say a Charles Schwab or like one of those kind of independently, more like wealth advised funds like a JP Morgan, they will pull your credit score to see like are you qualified and whatnot. And if you don't have the credit score that they are looking for, you can actually be denied. And sometimes these banks have higher interest rates on their checking and savings accounts. So they will kind of like discern and say, well, you don't meet our minimum requirements, so you're not going to get access to our services. And also miscellaneous other things like car insurance rates, cell phone plans, and more. Cell phones are a big one. I know right now with how things are going, some cell phones are $1,000 plus, and sometimes it's kind of hard to cough up $1,000 for a cell phone right up front. So you might be looking to finance or lease or get on a payment plan for your cell phone, especially if you want the brand newest and some flagship phones, and your credit score can impact that and credit your ability to qualify for that payment. And another one, how much will you pay to access credit? So even if you are able to get a credit card or a loan with a lower credit score, you may pay more to have access to that credit, which is really the crux of the matter. Credit card creditors may charge you a higher interest rate as a way to account for the high level of risk they are taking by extending credit to you, considering you have a lower credit score. And we're going to look at what that means practically in the next slide. This is your credit score impact. If your credit improves, you may be eligible to refinance your debt as well, which we'll touch on later. So we're going to look at this like terms, 36-month car loan of $25,000. And if you are on the lower end of the scale, the maroon colors, sort of 500 to like 659, you can see that the APRs are very high, 17%, 16%, 11%, which translates to anywhere from $822 to about $900 for the same exact loan, which is a very high monthly payment and it leads to extremely high additional costs over the course of the year. And versus somebody who is on the higher end of the scale, where you will get a lower interest rate, you'll be paying significantly less, almost about like $200 less, roughly, like 150 less for your monthly payment. And if you take that same loan, keep it for the full 36 months, you'll see some very, very different costs over the course of the 3 years. So, for example, if you're on the lower end, you'll be paying an extra $5,724 in addition for that same loan comparatively to somebody who had a higher credit score, got the lowest interest rate possible, and not have any additional costs. So this is where your credit score impacts becomes very real, because this is an impact on your wallet. This is an impact on your month-to-month cash flow, and again, this is not you being treated any differently. Let's say you have the same Toyota Corolla, Toyota Camry, two people, different credit scores will pay very, 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 very different for that same vehicle. And this is very real. This is information. I don't say this to discourage or to say, oh no, this is like gloom and doom. I communicate this to make you aware that this is happening. This is how the credit system works. And the more knowledgeable you are, the better positioned you are to take advantage of it in a way that helps you as opposed to hurting you. Any questions? Want to check the Q&A, the chat. Okay. Boom, boom. Very nice. All right. So let's get into how to start building credit history. So, before opening any credit accounts, it's important to know what credit scores are and how they work, which we covered. Uh, Now, how to start building credit history. Secured credit cards. Secured credit cards are a how do I want to explain this? It's a way where instead of having an unsecured line, which is a limit up to whatever you will qualify for at that time, sometimes it's 1,000, sometimes it's 500, 5,000, whatnot, and there's no collateral. By collateral, there's no money that you have put up to secure the loan and say, I have the funds to use this and I'm okay. A secured credit card is paid for by you, where you will put up, let's say, $200 or $500 of your own money, and that becomes your new credit line or your credit limit. And you will use it as a traditional credit card. You spend money, you pay it back, you spend money, you pay it back in full. And this is a low risk way for lenders to extend you credit and a low risk way for you to start to use credit, so that way you can be comfortable and build a relationship where that you are getting in the habit of paying a credit card, of using a credit card and paying it back over time with little to no concerns. And if you do happen to default or you're not able to make the payment, then there is some money secured as collateral, again, that you put up upfront at the beginning of the process, so that way the lender has access to those funds to pay back any kind of outstanding balance that you have.
Yeah, it's really great, especially for when you haven't had a chance to establish a credit history, which is one of the more difficult things because when you're just starting out, it's hard to apply for a credit card because you don't have a credit history. But how do you build a credit history if you don't have a credit card? Well, secured credit card is much more likely to be issued by a financial institution, sometimes on a case-by-case basis, but it's because you are providing the collateral, as Terrence said, to support yourself. So if for whatever reason you aren't able to make those payments, the bank doesn't really have any, they don't lose out on it because you've provided the sort of backup for that. So it is a great first step for some people. So something to consider if you really need to try to start building that credit in some way.
Thank you. There's also credit building loans, which are exactly what they are. Usually they have some very fixed terms, which is maybe a year, 1 to 2 years of extending a loan to you, and then with a very fixed interest rate, and you pay back the loan plus interest over that fixed period of time, and that becomes, if you, as long as you pay it back in full and you are doing your good credit healthy habit history and making your payments, you'll have an existing line item of, I've taken out a loan, I've paid it back in full, things are good, and now you have something that helps build credit history. You have something working for you instead of something that works against you. Let's see. You can also become an authorized user. Use with caution. So if someone you trust has a credit card in their name and they add you as an authorized user to start building some credit history, typically accounts you are on an owner have an impact on your credit, but being added as an authorized user can be a good way to start establishing some history, especially if you're not quite 18 yet. The account owner will want to confirm with the creditor that it will be reported to your credit as well at the time that they add you. And to be honest, there is some inherent risk to this, because if the individual, whoever you are being added on, has maxes out the credit card and or misses a payment, this can negatively impact your credit as well. But if you trust the person, this can be a great option to start establishing some credit history to get an account going. So, in summary, you can basically kind of borrow how you're basically, not borrowing, but being added on as like piggybacking to someone else's credit report and usage. But you're also being subject to and exposed to, if they are good credit history habits, you get all that good. But if they're not, you also get exposed to that bad. So there's some pros and cons to this, and you always want to communicate explicitly, clearly, and openly that this is with someone that you trust, that this is a process that you want to go into. You never want to go into this blind. Uh, okay, let's keep moving. Please keep the questions coming in if you have any questions at all. We do want this to be as interactive as possible, so that way you get the most value out of this presentation. Also, next up, how do I rebuild credit? So if you are in a position where life happened, things, whatever, flat tires, random explosions of life and whatnot, if they happened and you find yourself in a position where your credit score is not where you would like it to be, that's totally okay. You're not stuck in stone. We will talk about ways to rebuild credit, and it happens a lot faster than you think. Uh, let's see. How do I rebuild credit? So, first off, pay off outstanding past due balances. Uh, Prioritize catching up on past due open accounts and paying off any collections. So, where do I find the information if I want to pay off any outstanding collections and whatnot? You will find it on your credit report. Your credit report will usually have some contact information for the creditor, usually a phone number that you can call and say, "Hey, I would like to pay this off. What can I do?" And then the more than because they want their money, they are very happy to work with you and say, "Yes, we will gladly take your money and clean this up for you." Sometimes you can work out a payment agreement. You can pay it in full. Sometimes you can settle, but I don't recommend settling. I always recommend paying off the balances in full as you owe them. Even if it does take more time than you would like, it is much better reflecting on you as a borrower to pay your balances in full. Let's see. Now, secured credit cards and credit building loans are also great ways to rebuild credit too. So not just building credit, but also rebuilding credit. So they work twofold and they are very, very effective and very, very useful. And that's totally okay to use. Absolutely. Uh, we're gonna skip that. Secured credit cards. And now we're gonna jump into credit building myths next. So, some myths about credit. Um, well, actually, parts of the reason why building credit can feel so overwhelming is that there is a lot of conflicting information out there, and some of the information is flat out not true. Let's take a look at some of the few most popular credit myths and why they're not necessarily true. Myth number one: you must carry your credit card balance from month to month in order to build credit. This is one of the most common credit score myths that you have to carry a card balance. And it is not only is it not true, but it can actually cost you money. When you get your credit card statement every month, there's a statement balance and a minimum payment due. To avoid a late payment, you need to pay at least the minimum payment due by or preferably before the due date. However, if you only pay the minimum payment and there's a difference between that number and the statement balance when your next cycle hits, you will typically owe interest on the balance amount that you did not pay. For example, if your statement balance was $50 and your minimum payment that was due was only 20 and you pay 20, if you only pay 20, you've made your payment obligation. Boom. But when your next statement cycle closes, you'll be charged interest on that $30 difference. If you pay the full statement balance of $50, you will typically not be charged any interest. Some people may believe that they must only pay the minimum payment to make sure they are carrying a balance into the next month to build credit, and that is simply not true. We encourage you to get in the habit of paying off the entire statement balance in full. When you get your statement each month, this saves you money on interest and it will help keep your balances lower. And remember, it also helps with credit card utilization as well. You never want to go above that 30%.
Yeah, just to put it in like very simple terms, because I feel like sometimes that can help me. Basically, you use your credit card. Uh, I like to pick like one thing, like groceries or something I can pay for with the cash I have. I use my credit card specifically for all my grocery payments, and then same day even, you can go home and just make a payment to the credit card for the exact same amount. But as long as you do it before the end of the month or your billing cycle, which is usually once a month, uh, and you pay it down so your credit card balance is zero before the next billing cycle, you will raise your credit and you will not be charged any interest because there's no outstanding interest to be charged month over month. So I feel like people don't always know that, especially if you're newer to it. And it's like the best way to really get in a good habit of not having to pay extra, but you'll definitely be increasing your credit score as you go.
Awesome. Also, I do want to mention if at some point you weren't paying off your balances in full and you were like, oh no, I wasn't doing that, totally okay. You can start doing that next month and it'll be totally fine. Myth number two, all credit scores are the same. What I see on Credit Karma is what my credit union or bank will see when I apply for credit. This is another myth. Uh, So there are two types of scoring models for your credit score, the FICO score and Vantage score. Each model determines credit scores differently, and the scores are not the same. Scores can vary dramatically, so please keep that in mind. Um, so when you check, let's say Savvy Money through us, Credit Karma, Credit Sesame, Credit Wise, they all use the Vantage score, and the majority of the time you're receiving a free credit score. Um, that your credit card company will provide to you. And truthfully, these are for educational purposes only. So that way you are aware of what's going on, you can see it, but it may not be the most accurate. So you might see Credit Karma will say, hey, I have a 710. And then when you go and apply for your loan, you might see you have a 660. And if you want an accurate FICO score, sometimes you have to pay for it. You can go to the credit bureaus directly or go to myfico.com. Personally, and this is not something that anybody has to do, this is my personal habit. I pay for my Experian credit score directly from Experian, and I get all three scores. I do pay a monthly subscription service for it to, so I get the most accurate information. And that's just my own, like, I just want to know what's going on. We do have a free option that the credit union provides on Savvy Money, and you can get your credit score updated, and you can also play with it a little bit too, which is kind of cool. So you can see how it'll change or how it'll be impacted if you, say, take out a loan, or if you pay off a loan, if you decrease your outstanding credit card balance, if you have a credit card balance, and you can see what the impacts are going to be. And Ty, if you can, put that link in the chat. Savvy Money is pretty phenomenal. It is for members, if members of the credit union, and you can sign up completely free of charge. Myth number three. Opening a new credit card every time I get an offer is a good thing for my credit score because you need lots of credit cards to build credit. So, while technically having more available credit limits can help you improve your credit card utilization, this is a very dangerous game to play. When you open a new credit card, you have a new hard inquiry and you have a younger account in your length of credit history, both of which can negatively impact your credit score. Also, the more credit cards you have, the trickier and more complicated it can be to keep track of due dates and make all payments on time. And there is potential for you to get in over your head with balances spread across multiple cards. While there is no magic number of cards, it is best to have no more than two or three that is typically recommended. Personally, I have two credit cards. One is my longest line that I had since I was 18, and one I got when I was working at my old job that I've had with me, and that's been phenomenal. You can be very, very happy with two credit cards. You can be very, very happy with one credit card, and there is no magical number that you have to have. Um, if anything, it is a reflection of an honest reflection of how best you believe you can manage the different types of credit cards that you have if you want to have multiple. Ty, I know you have a special credit card that you get. You want to talk about it?
Yeah, so I actually only currently have one credit card. I probably should get a second one just for general use, but at one point I had owed a lot of my credit cards, so I paid it off, and I was like, all right, I'm trying to readjust. But what I did was I made a special plan because I was trying to save money for my cell phone bill. So I left AT&T because they're the monthly bill, and that was very expensive. And I joined Google Fi. So Google is my carrier, and it's It's much cheaper, and I still have service just as many places. But then what I did, because it's a little bit more difficult to find like deals for phones and stuff through Google than it is at like one of the major retailers, is I got a Best Buy credit card. So there are a number of businesses that will offer you a credit card. Sometimes those credit cards can be either only usable at that business or anywhere, but they generally tend to have really strong like promotionals or deals or something with the business because it's a business credit card. So I have a Best Buy credit card that I basically just I use exclusively at Best Buy to get a large electronic purchase or things like that every once in a great while. And then because it's a Best Buy credit card, they actually have promotional financing. So basically, I can, as long as I pay off my purchase within 2 years, there's zero interest, which is really, really, really cool. I don't get any extra. So like when you use the Best Buy credit card, it's you can either get like cash back or points or rewards, like a more traditional style credit card, or you can do the like 2-year financing option. So I almost always do that option because I don't necessarily need those benefits if I don't have to actually also pay that extra interest. So that's really great because I can pay it off over the 2 years, which is usually more than enough for me. I can get like that big thing. Usually I put my new cell phone or whatever like sort of big thing I'm going to get on that card. And then I can pay it off over a couple years over time. So I don't have to do it all at once. And I'm not paying any of that extra interest. And I'm making my credit score go up. So something like that, if you find yourself where you're like, oh, I actually really do love like a big tech purchase or something like that, that might be a great option. There's a lot of options out there for you, a lot of different types of credit cards with different types of promotions or rewards or perks. So it's always good to really make sure you're getting out there and doing your research. But tying it back into this, I'm using my one credit card right now, and it's really working. It's something that I've chosen to do over time. I had more before while I was raising my credit score, but now that my credit score I feel like is in the place where I want it to be, I don't need to keep all of those extra things going. So having one or two credit cards is definitely enough. In fact, you definitely don't want to have a lot of open lines. Having a couple different sources, a couple different types of credit is good for your credit score, but you really want to keep it maybe to like two or three, I would say is like a good healthy range.
Yes, thank you. I'll also want to mention, because you mentioned that, Ty, not all credit cards are created equal. We won't be going into a deep dive into credit cards in this presentation. We do have some more information on like the Schumer box and like how to compare and contrast credit cards on our other credit presentation that you can see on our YouTube page when you get a chance. But let's continue. So, credit myth number four: closing a credit card when I pay it off will improve my credit score. Not necessarily the case, and it depends. So, if the credit card that you are paying off is your oldest line, something that you've had since the beginning, um, and you thought, okay, I'm going to pay it all off, I'm going to get rid of it, that could actually hurt. Um, so this could negatively impact your credit score, actually. And you'll lose the length of history from that card, and it could impact your utilization. Once you open a credit card, it is best to keep open as long as you are managing the card responsibly. It is okay to close a card if you feel it is necessary. So the myth, closing a credit card and paying it off will improve my score, not necessarily true. I will say it does depend on a case by case situation. It does depend on if the credit card is used actively and managed properly, and if it is an old account. So please don't take this as keep all my credit cards open or close all my credit cards. Please take this as let's do some research. Let's dig in a little bit, talk about it, and determine if keeping it open or closing it is the best case scenario for your specific needs and purposes. Next, checking my credit report or my credit score. Absolutely not. Earlier, we talked about reviewing your credit report and the differences in the credit score monitoring tools, so FICO Vantage score. We also talked about how applying for credit leads to a hard inquiry, which can negatively impact your score. So, some people also believe that checking your own credit report will also hurt your credit score. This is not the case. So, there are two types of credit inquiries. And by credit inquiry, I mean you're sending out like information to the ether, to the internet, and saying, like, hey, I want some information back. So there's a hard inquiry, which is what a creditor or lender will typically do a deep dive into your credit history and measure their risk level of extending credit to you that you're requesting. What that means is if I am going out for a loan and I say, hey, Harvard Federal Credit Union, I want to get a brand new car. Please give me a loan for it. That is and they say, okay, Terrence, let's look at your credit report. And they pull it. That is a hard inquiry. That is the lender saying, I'm doing an active pull. I want to see Terrence's credit information and I want to see if he can pay back the loan. Hard inquiry. And that will negatively impact your score if done too often. If it's done once, no big deal. And I also want to communicate this is like a little bit of an aside, like some insider knowledge that you're only getting because you're part of this presentation. Is if you are shopping around for an auto loan, a mortgage, and whatnot, and you're going to be having your credit pulled by multiple different banks, try your best to have a list ready of all the banks that you want to work with and have all of them pull your credit within a 2 week window. What that will reflect is because the credit bureaus, they're humans, they're people too. It'll show that, hey, Terrence is shopping around for credit. He's looking for a loan, and it will actually consolidate all of your inquiries into one, so that way it does not impact you as harshly as if you, let's say you started applying in January, got your credit pulled in January, you get your credit pulled again in February, then you get your credit pulled again in March, and then April and whatnot. That looks a little bit more risky behavior to the credit bureaus, and that will start to negatively impact your credit score. Uh, so to bring it back, we talked about reviewing your credit models too. So if you want to pull your own credit report for educational purposes and pull your own credit score through Credit Karma, Credit Sesame for educational purposes and use through Savvy Money. That's completely okay. That's called a soft inquiry. Anything that you do for your own educational and monitoring purposes, this is totally okay. This does not impact your credit score, and it is actually incredibly important to do so on your own for the sake of monitoring what is reflected on your credit report and what is reflected on your credit score. Because sometimes there can be mistakes. We live in an age right now with a lot of scams and fraud, and you want to do your best to be kept updated on what is being reported on your behalf. Because if it's inaccurate information, you want to go about you want to go about reflecting correcting that as soon as possible, so that way you aren't feeling the effects of misrepresented information on your credit report. So to quickly summarize, because I know I kind of went off on a tangent there, checking your credit report will not hurt you. It's actually encouraged to do so at annualcreditreport.com. A hard inquiry is when the lenders will do a hard pull in the purposes of extending a loan to you or some type of credit card or some type of credit. And a soft inquiry is what you do for your own educational purposes and does not have an impact. So hard inquiry can have an impact, a soft inquiry does not have an impact. If I did not make that super clear and kind of choppy, please send me a message in the Q&A feature and I will answer questions at the end of it. Next, some healthy credit habits. So, once you get access to credit, it is incredibly important for you to practice healthy credit habits to ensure that you are building positive credit history. Before we wrap up today, we're going to talk about some tips on healthy credit habits to practice, whether you are starting from scratch or working to rebuild positive credit history. And the first one, I know we've said it before, Kai has mentioned it, and it's worth repeating again: make every payment on time every month. This is one of the easiest and most impactful ways that you can if you are looking to build credit, rebuild credit, or just keep your high credit score going. Making your payment on time. I know it sounds simple. I know it's like, I don't want to pay my bills, but you know what? If you want good credit, you have to pay your bills on time. And especially if you're, paying you're making your payment on time every month that you do is a notch in the right direction towards healthy credit habits. Next up, keep credit card balances low. I hinted to this earlier. So, credit card utilization is your credit card balance compared to the maximum limit that you have available. And this is the second largest factor behind making your payment history on time every month that can impact your credit score. So strive to always keep your balance below 30% of the 30% of the credit card's maximum limit. If you can keep it below 10%, that's even better. And if you can take it a step further and pay the card off in full every month, whew, you're like supercharging your credit score healthy habits. Um, so, for example, just to add some numbers to it, so let's say you have a credit limit of 1,000 and you don't want to go above 30% utilization if it's the one credit card, which means you don't want to go above $300. And if you are able to pay off $300 in full every single month, phenomenal. If you're not, understandable, just understand that you will be paying some interest, but try your best to keep it below that $300 range. And this is reflective of the limit that you have. One technique is to pick one small budgeted expense, for example, Netflix subscription, Hulu, that you can use only for the sake of that one card and that one purpose, and it will keep the balance low. Right now, Netflix has gotten up there to like $20 per month or $25 per month, depending on how many screens you have, which is well within the 30% range, or actually 10% range actually. And what you can do is what I recommend is giving Netflix your credit card information, allowing the payment to flow through, and then going into your bank account information as well and setting up an automatic payment, and then having it pay off the card in full every single month. Now you get to watch Netflix without any concerns. You get to build credit habits and good positive history without any concerns, and you can let that ride for as long as it's possible because now you're just paying off your balance in full every single month and you're getting all the bells and whistles of that as well. Next up, do not apply for new credit unless you need it. This goes back to what Ty and I mentioned earlier. You don't have to have multiple credit cards to have a high credit score. One to two is more than enough. But if you do need to apply for new credit, really only do it on not an emergency, but if it's truly necessary. If there are other options and you want to, you really need to, if you can have the cash or maybe there's other sources where you don't have to get credit, try to utilize that first. But if it's necessary, of course, do what you have to do. You do want to shop around for the best rates on something like a mortgage to get all your ducks in a row to apply at multiple lenders in a short period of time. As I mentioned earlier, utilize that short window of 2 weeks and take advantage of it. Don't ignore bills, even if you don't think you should owe it. Uh, this is very applicable to medical bills, any surprise bills that you get in the mail that you're like, I don't even remember going to that spot. If you feel like it's inappropriate, like absolutely, like do some research into it. But if it is you, pay it back. Um, Sometimes, if you don't have the funds to pay it back in full, totally understandable. Things are hard right now. See if you can enter a payment agreement or a payment plan. Um, will say, little tip from me to you: if you have any medical debt and it's something that you can't afford to make the payment on, make a phone call. Say I can only afford to pay $5 per month or $10 per month, and because it's medical debt, they'll take it, and you can work with them. It's more likely that it will have a positive impact on you if you are willing to work with the lender as opposed to just flat out ignoring the lender. That way, you are at least making some payment, even if it's not, a large payment. You're working there, small steps. You don't have to take large, big steps. Also, review your credit reports annually. I say more frequently if possible. So that way, again, We are living in a time of AI, scams, fraud, and you want to make sure that whatever you are seeing on your credit report is accurate information. And you want to, set it as a calendar reminder. Make sure that you are able to see what's going on. And if you find something that's inappropriate, that's not supposed to be there, that's not accurate, inaccurate, not inappropriate, inaccurate, then the sooner you catch it, easier it is for you to go about taking the necessary steps to go about cleaning that up, which you can view our YouTube channel. We have scams and fraud webinar as well that talks about what to do if you find yourself finding some inaccurate information on your credit report, or if you've been exposed to some kind of scam and or fraud, what you can do to protect yourself in the future and prevent it from happening again. Now, I'm going to say it again because it's important. Because I know we said it before a couple of times. I'm going to say it again. Make every payment on time every month. This is worth repeating because it really makes a huge difference when it comes to your credit. If you can, I know life is complicated. I know we're all doing things. And I know, especially right now with back to school season, the last thing that you want to hear is make your payments on time every month. If you don't want to do that, absolutely set it up on auto. Set up your minimum monthly payment to be taken out of your account, whatever it's going to be in full every single month. I'm not saying, make your payment in full every single month, but if you can, yes, but set up that auto. And if you have some extra funds and you have a balance, add that in addition to your minimum monthly payment so that way you can pay it off that much sooner. And now I'm going to kick it
I
over to
want to just chime in real quick to you and say,
sure.
one great thing, one good thing about student loans that people might not always realize is that paying your student loans counts as paying a loan that will increase your credit score. So as long as you're paying your student loans on time every month, at least the minimum, you will be increasing your credit score and building credit history, regardless of whether you've gotten a credit card or anything in addition to that. So that's like a great little thing that I think not everybody realizes. So another thing that is more useful.
Yes. And I'm going to keep going because the next one is your favorite one.
All right, this is just a little thing we love to talk about, the what the heck effect, which is that failure is part of success. And I always like to quote Star Trek at this point because it's fun and it's a great way to relate to this type of thing. The Star Trek quote that I like is, "It is possible in life to commit no mistakes and still lose, but that is not failure, that is life." And what I
Bars.
really like about that is like, even if we do everything right, even if we have all the right best behaviors and all these things, there are outside factors, there are things outside of our control, there are different things that can impact our situation. And that is it that isn't bad. That is just life. And even if there are months like that, days like that, there will be better days, there will be better months. And so it is really important with financial stuff and creating these habits and these like mental shortcuts to not lose motivation when something doesn't quite go your way. And so one of those factors that might be hard to control even might be a personal thing. It might be really hard for us to uh, limit our spending on the credit card or to make sure that we are going in there and making the payment. But the important part is that you're always trying to improve. You're always trying to find these mental shortcuts and find ways to take more steps forward than you are taking steps backward. And so even if you have a rough month and you can't make as much of a payment as you thought, or you're having trouble, or some unexpected thing arises that you don't have the cash for, an emergency or something, and you must put that on your credit card and put more money on there or something like that that you wished you didn't have to do, it's okay. The important part is that you are still making those good behaviors. You are still making sure you pay on time, at least the minimum payment every month, and you will be increasing your credit score. You will be working on these habits. You'll be taking steps forward, and you will be improving your situation. So it's just really important to make sure that you are feeling good about that and feeling good about moving forward, even if there's difficulty.
Mm, thank you, Ty. Well said, well spoken. Ty's our resident poet and like Star Trek fanatic, and very, very, very effective when it comes to these presentations. So now, Green Path Services. If you have been here and you were like, Terrence, you said a whole lot of mumbo jumbo. I heard words, I heard make payment history on time, and the rest I just zoned out on. Totally fine. Green Path is the one thing that I'm pleased to ask that you take away from this because they offer free and confidential financial services, whether it's reviewing a credit report, home rent, mortgage, and home buyer counseling, student loan counseling, and debt management plans. They are amazing. If you want to take advantage of them, you don't have to pay for it. Just say, hey, Harvard FCU sent me, and you are covered. They are credited credit counselors and they will help for your specific situation. And if you have your phone, if you want to take a screenshot, get ready, pull it out. Boom, here's the information. Green Path Financial Wellness, you can call them. They speak over 100 different languages. They have extended business hours, and you can learn more through the phone call at 877-337-3399 or directly through our website at harvardfcu.org/thrive/greenpath. And you can contact them again, just mention our name, and you can get access to their services free of charge. Okay, Learning Lab Plus. So this is also another great feature of who we thought GreenPath. They offer free online educational portals where you can learn about different courses to make the most of your money, a credit tool, and paying down your credit card. They are phenomenal. I can't say it enough. GreenPath. I'm actually going to go back. So in case anybody didn't catch it, please use the opportunity now to take a screenshot, take whatever you need to do to take a
Put a
picture of
link in the
GreenPath.
chat as well, so you can
Boom.
click right on there if you need to.
Thank you, Ty. And now, before we depart, we're gonna stop here and ask for questions, anything at all. If you want to put it in the Q&A in the chat, I don't
Just the
see it.
Q&A, not the chat.
No, sorry, the Q&A. Sorry, in the Q&A. Thank you. I don't see anything in the Q&A. What about you, Ty?
No, not at this time. So,
Okay.
um,
Well, hold on. Let's keep going. Before we depart, just a disclaimer: this presentation has been only for educational purposes. It is not intended in any way, should but not be constructed as tax, legal, or investment advice. Please always contact a certified advisor for your specific situation, which we do have them at the credit union. GreenPath is also certified to help you with this specific situation. Oh, actually, hold on. There is something that just popped in. How about the cell phone bill? Does that impact the credit score as well? Um, so your cell phone bill may report on your credit report, but not always. Um,
I think it depends on if you have like purchased a cell phone through your carrier that you are paying off over time. That is technically probably part of a loan that's built into your plan. And so therefore, if you're paying it off over time, technically that's part of a loan situation. And so in those cases, it may appear on your bill because that is money that is you're paying off over time. But if you're talking about like just your sort of the monthly cost of your plan, I don't think that that would appear on your credit report.
yes, because I've reviewed my credit report and I've had a cell phone bill for quite some time, but I haven't seen it show up. But as Ty mentioned, and I think very accurately, if you are financing something, it might show up there as well. And let's keep in touch. Please reach out. Oh, also, thank you for your question. Connect at harvard.fcu.org, harvardfcu.org on all socials. And if you want to stop by and just talk to us and say hi and see our lovely faces, you can stop by one of our branches at 104 Mount Street in Cambridge, Mass. We'd be more than happy to help and to see you. And Ty has put a very, very valuable link in the in the chat. This is in the chat where we have a survey. Please let us know how we did. We would love to impact and improve. So we'll always, tell us how we did.
Yeah, our team, we really like hearing feedback on our presentations. We're always trying to find better ways to reach the community and make sure that we are answering questions and having good content that people really need or have like a want for. So we're always trying to read that. We're always trying to improve. So please, if you don't mind, take a few minutes to fill out the survey. And thank you all so much for coming today. We really appreciate it.
You are now a little bit smarter for attending this presentation. Pat yourselves on the back. You now know about credit. Good job, guys. Or
Woo!
folks, everyone.